Hi, good morning, everybody. Thank you very much for joining us today for our next episode, Learning from Expert. And today, our special guest, Sal Tomaselli, our famous and preferred mortgage broker. Hi, Sal. Good morning. Happy New Year.
Hello, Eugene. How are you?
Good, good. Thank you. Thank you. Happy to see you today.
You too. You too.
Today, our theme of this meeting is mortgage rates. What's happening with mortgage rates specifically since October 2023 till today, and hopefully Sal will share with us projections for the 2024. I'm Yevgen Pitelman, real estate agent with Coldwell Banker Real Estate. And I would like to start by sharing my screen and showing you the chart. And I will explain why I chose this particular time frame.
All right.
Sal, can you see my screen?
I could see your screen, and thank you for posting that. So, hello, everybody. My name's Sal Tomaselli. I'm the owner of Professional Mortgage Solutions. I've been in the mortgage business since 1985, so have a couple of markets and cycles under my belt, and I'm fairly familiar with what happens in the mortgage business in these types of times. So, I appreciate Yevgen Pitelman putting me on this video, as well as I appreciate doing helping his clients and at Coldwell Banker. So it's a pleasure to work with you guys. As far as so what's happening in the market right now, it's very interesting. Rates. Eugene's screen, basically the screen up on the board, it basically shows rates where they were in October, and they were pushing as high as 8%. And what's happened since then, the market has started to come down, and you could see that green dot moving down, and that's basically giving us an indicator of where the market is headed. And interest rates are things that just don't go straight up or straight down. So you'll see little variations, but you can identify a trend. And right now the trend is obviously that rates are coming down, which is great for homeowners, great for first-time home buyers, who, it was really hard to afford a house at 8%. And now prices have dropped, or more. I'd rather say interest rates have dropped, and due to this drop in interest rates, it's made that same house much more affordable because there's a drop in the interest rate. So that's great. And this is a trend where we see the market is moving in a downward trajectory. So what's happening is at this point is we hit a high. That high is now reversing, and we're seeing it slowly come down. So this is a great indicator for people looking to buy or refinance because right now interest rates are lower, and they will more than likely continue to go lower as we go through the year. We're in an election year, so it's a pretty exciting time. So there's a lot of downward pressure on rates. They want the population to be happy. And so in addition to the natural movement of the market, there seems to be an overall trend where we're going to see rates going down.
I see. Okay, so let me ask you this. As far as moving up, so since approximately this mid-December 2023 is going all the way up to right now, it's almost 7 as of last Friday. Do you think we have to worry about that, or is it just a normal way again, up and down, part of being up and down all the time?
Well, in the core, that's a great question, because you're going to see those minor fluctuations. It'll go up a little bit and then push down, and it'll push up a little bit and then push back down. So what happens typically is this is the movement of the market. This is a natural progression of the market. So you don't see a straight line down, typically you see these little, even if you go back to, if you look at your complete chart, you see these little up and downs, almost like the tooth of a saw, where it goes up and comes down, and it goes up and it goes down. And this is a very natural progression. Since last Friday, rates have actually come down, and now we're probably right around the mid sixes. So there's actually been since this chart was
it's a delay. This chart
was printed,
delay, yes.
which is very common. It's always kind of backward facing, right? So if we're looking at 8 days ago, 9 days ago, since that time, rates have kind of normalized into about the mid sixes at this point. Okay. So we're at January 22nd, 2024. And, from October, where we were close to 8%, to now we're roughly at about 6.5%. So, if you look at that and not dive too deeply into, looking at the small movements in the chart, the overall effect has been rates have basically come down about 1.5%, which is really, really significant and very important for people looking to buy a home.
I got you. I see. Okay. Look, as far as activity on your end, because I see, let me stop my showing my screen. As far as activity, I see on my end, from real estate activity on my listings, I see I've collected data from one key MLS, from Brooklyn MLS, and it shows for the past 2 months pretty healthy market. What I mean by that is that approximately 45 to 50% of the listings sold under 60 days, approximately 20 to 24% of the listings sold under 30 days. And those really important indicators, market indicators, are considered to be extremely healthy. So we haven't kind of a pretty strong market, all other things considered. So what about you? What about your mortgage activity?
So that's a great question. When interest rates were high, we definitely saw basically, I want to call it somewhat of a shutdown, but where there was no activity. And so, in the mortgage industry, usually we see the activity after you see activity, because you're gonna, the clients are going to come out, the people that are looking to purchase homes are going to come out. They're going to start shopping for homes. They're going to make offers. And after that, I start to see the activity. So in the last 2 weeks, we've definitely seen an uptick in purchase activity and refinance activity. I would have to say that right now, it seems like the loans that we're bringing in, it's about 75% purchases and about 25% refinances. The good news is that this drop in interest rates has basically caused some activity in the market. And what I think is even a more important aspect to all this, we're in January, and historically, November, December, January, February are typically very quiet months in the real estate mortgage arena, because people are working on holidays and maybe some travel and things, and they're not really buying homes typically, and usually the spring market is where we see activity. And yeah, and to see activity at this point in the marketplace, mid-January, is a really good indicator. And for those people that are considering buying homes, this is important, because if it's active now, there's going to be demand. And if there's demand, prices will kind of get forced back up. And so, I think as a buyer, if you're interested in purchasing something, this is a tremendous opportunity now before prices start getting pushed up in the spring market, when it really gets heated up. So this is a really great indicator of what to expect for the second and third quarter of 2024. I think we're looking at a very busy year overall. So it's very interesting.
So you
what's
feel
taking
like
place.
this year we'll have much more activity than the previous one in 2023.
Well, we had a tremendous lull in 2023 due to the interest rate
Right.
increases that took place, and they happened swiftly.
It's
And we went
hard to beat
from
that.
2.5% to 8% in a very short period of time. Where
Right.
the federal government tried to, put a stall inflation, and now that seems to be under control based on the indicators, and so it seems that it makes sense at this point. We've reached a new plateau, but it
Mhm.
also seems like it's going to be a very active 2024 from a real estate perspective.
Yeah. Well, thank you very much for that insight. And so basically, what are you saying? So whoever's in right now looking out to go shopping for homes again. So what do you say to these people? Should they do it right away? Should they postpone? What's your main advice?
Yeah, absolutely, Eugene. Look, I think it's critical for people looking to purchase a home to get pre-qualified as quickly as possible. Understand based on the new rates, these rates that we have in place right now, what you can qualify for. It's critical when you walk into a real estate office to identify a price point. And what I do for my clients is I analyze, their income, their credit, as well as the taxes in the community they want to purchase. So if you're in Brooklyn or if you're in Queens, taxes are at one level. If you're purchasing in Westchester or Nassau counties, taxes are much higher level. So there are trade-offs with regard to how that will affect the ability for people to purchase a property or how much of a mortgage they could afford. And so it's really important to get those numbers. Sometimes I issue two pre-approvals when I have undecided clients, one for their for a higher tax rate and one for a lower tax rate, or one pre-approval that's based on a one family purchase and one based on a two family purchase, because they'll be deriving income from that other unit. So what we do is we kind of customize the approvals based upon their specific needs and the type of search that they're going for. This way, when they get to your office, you have a clear roadmap, and you're always welcome to call. I always encourage realtors to call me and verify the information, and kind of walk through any questions that the realtor might have. But what it does is it gives you as a realtor the proper guideline and boundaries of what to show the client, as well as what's going to work and what makes sense. And so I think it's a critical step.
Oh yeah,
I always tell
absolutely.
people, get pre-approved as quickly as
Of
possible.
course, it saves everybody's time, narrow down the search, and we know nobody's wasting nobody's time. So we already know basically the path where we're going and what we're looking for. It's certain. I mean, I'm with you on that 100%. Thank
That's
you.
probably the most important takeaway
The
from
most important.
today's.
Yeah.
Rates are coming down, and get
Right.
pre-approved quickly.
Yeah.
That probably makes the most sense.
And before I let you go, one quick question. So approximately how much it takes to, let's say I'm calling you, I'm a buyer, I want to know what I'm capable of, what's my budget would be. From the moment I call you, how long it takes for you to give me a pre-approval so I can go actually, first of all, I know my path and I'm feel free to go make offers.
So it's great question. It's pretty quick. Essentially, what I do is I have a 15 to 20-minute conversation with the client. We get all their details. We see, sometimes it could take up to 30 minutes, right? But basically what we do is we get all the important data from the customer verbally. And we always verify. So we always ask the client to provide their pay stubs, their W-2s. We basically need two pay stubs, the last two. last 2 years of W-2s, and in some cases, the tax returns for the last 2 years. And with those three pieces of information, we're able, and a conversation with the client, we are able to determine how much you could be approved for. So usually the process takes within 24 hours of me having a conversation with the client and them sending me the documentation. So it's really critical that we verify everything. Okay. But on our end, what we do is we'll typically do a soft pull on the credit, not to create a hard inquiry, but we'll get an indicator as to what their credit looks like. And their credit with their income and their assets will basically create a picture for us as to how much they could afford. So typically the short answer is 24 hours after speaking with me or less, they'll have a pre-approval and they'll be able to go to a realtor and like yourself and start shopping.
Great. Great. So considering the importance of this of the question, I mean, I believe 24 hours is not such a long time. It's not like a week or a month or so. So 24 hours and you're good to go, and you know where you're going. Actually, you know what to expect, and then you're welcome to make offers on the properties. Absolutely. My team and my right hand guy, his name is Jason Black, and he works in conjunction with me, and we work as a team. And then Shayla's our processor, and we basically, the three of us, create this triangle where we're collecting information, we're a liaison to the bank, we'll run you through automated underwriting. So our pre-approvals are really just like, I would have to say they're almost like pre-commitments, because we'll get an actual approval from either Fannie Mae or Freddie Mac. And so it's an invaluable service, because, it's not just, based on verbal information. It's been run through a system. The system has approved you. They've looked at your credit. So it's a very high level approval. I got you. Thank you very much, Sal. It was really helpful. So now we know about the interest rate. Now we know the market. Now we know what's the process to get the pre-approval, how long it takes. Thank you. It was a great pleasure to talk to you, see you today again. Again, everybody, thank you for joining us today. Please don't forget to subscribe to our channel. And there's a button with a ring. And so please hit that button to make sure that you get notified when the next video is available. And all our contact information is below. Sal Tomaselli, mortgage broker, and me, Yevgen Pitelman, a real estate agent with Coldbank Real Estate. Thank you again, and have a good day. Bye. Thanks, everybody. Take care. Bye-bye.